Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. US retail sales and PPI inflation numbers are out, and the reaction so far has been one of dollar strength. As we head into Friday, it definitely doesn't seem very pretty for the risk assets. Good morning, JK. The bout of dollar strength, is it the start of a trend or just a retracement? What's your take?
Uh, Good morning. Frankly, dollar hasn't moved that much considering that we had a hotter CPI number, then PPI was again stronger. Retail sales improved over last month. Jobless claims were lower. All that considering, and the big move in yields, of course, we had 2-year, 10-year, and 30-year. All of them have moved quite a bit in the last 3 days in this week, actually. Considering that, I think the move in the dollar has not been that significant. We had sizable fall in the dollar index over the last few weeks. And this week, after these data, we have seen some marginal correction in the dollar index to 103 plus. And I don't see too much higher from these levels. Of course, it will not come down also ahead of the Fed meeting, which is out in the next 3 days. Yes, I mean, to delve into the details, PPI was like all other inflation data that was released in this year, hotter than expected. Goods PPI soared 1.2%, that's 6-month high. Headline printed 0.6 for the month-on-month versus 0.3 forecast, whereas the ex-food and energy index popped 0.3% versus 0.2 forecast. So the major contribution to the disinflation was from goods, but the services side actually has been again getting more traction on the prices. So that the hotter goods inflation has had been feeding into the inflation, but now that has stopped, and the services side inflation has been just on the higher side. Of course, there is an expectation that the continued commodity price surge due to the Red Sea and Panama Canal crisis can increase, and that can actually feed into the consumers' prices as well. So these are the concerns that the market has, that inflation can become more entrenched, and Fed can postpone their rate cuts from even June to July also. Although current expectations is still between 60 and 62% probability for June. All the total cuts for the year, which was just a few days back priced at 90 basis points, is now down to 75 basis points. Retail sales, again, it came better than last month's 1.1% drop at 0.6%, but it was worse than the worse than the expectation. Also, the control group that sales that feed directly into the GDP and which the Fed tracks closely, that was down at minus 0.3%. It was mixed data for retail sales, but overall, if you look at it, the consumption, which occupies or contributes more than 60% of the US economy, has been holding up very well. The job market is still quite strong, notwithstanding the drop, rather the higher unemployment rate that we saw last month. And people have been holding on to their jobs, and the retrenchment has been minimal except in the high profile jobs. So wages have been rising. All these things are kept to the consumption strong in the US economy, and that's reflected in the retail sales. That one point to note is that while the retail sales are adjusted for seasonality factors, it is not adjusted for inflation. So higher prices can lead to higher retail sales headline numbers. So that needs to be kept in mind. Jobless claims for the week, for the previous week, came lower. Again, confirming that the job market is not collapsing, and it is seeing that people are there are less number of people putting up claims for jobless benefits, as there the hiring has been steady, and there has been no major layoffs as well. So after the data, we did not see much reaction initially from the dollar, but then gradually it has gone up. and we are seeing it towards 103.40. Euro, which had held on even after the CPI data came off yesterday, reacting to the yields move. And the differential between US and Germany 10-year yields also popping up. What we have seen is that twos have risen by 11 basis points, tens by 21 basis points, and 30s by almost 19 basis points in this week alone. So that cannot be ignored. And as we move into the Fed meeting on Wednesday, Fed meeting outcome on Wednesday and the dot plot, market remains cautious. So there is a bit of short covering in the currencies against the dollar as well. On the GBP, it was well supported because of the higher GDP number, rather GDP coming quite positive. But again, due to the overall dollar strength, it has slipped around mid 127s. Good support at 1.27 for euro. Good support at 1.0840. Japanese yen is interesting because there's a lot of uncertainty surrounding their monetary policy as they meet next week. Contradicting news on end of deflation, wage negotiations that has been seeing record higher settlements, and more to come today, of course. And the rub off from higher US yields have all kept the USD hemmed in a narrower range between 147.50 and 148.50. However, expectation of end of negative interest rate policy next week is definitely rising. And if it does happen, I see yen rising strongly towards 145 initially. But as always, never bet on Bank of Japan's forward guidance through their statements, and should keep the positions small ahead of the event. On the stocks, of course, there's been more profit taking as yields rose. Again, cautious stance ahead of Fed meeting. See, it takes only two members to shift their rate cut expectations to the longer end to get the dot plot in median dot plot at two cuts rather than three cuts. So that's a very close call. We did not have any Fed member statements because it's in a blackout period ahead of the Fed meeting. So we only had to take our own conclusions from the market moves on the expectations. On India, we had WPI inflation that eased to 4-month low of 0.2%, helped mainly by the fuel inflation drop, though food inflation remained higher. Though not much importance can be taken from the policy point of view, the number of WPA coming lower reflects the fact that goods inflation is very insignificant, particularly at the wholesale level, and CPI inflation staying above 5% is mainly due to services prices remaining elevated, as is the case in most other countries as well. On the rupee, of course, we did have spike up to 90.91 yesterday once again, and that was mainly after the PPA number from US, more in the offshore market. The domestic market, of course, held near about 89 levels. But interestingly, we are holding on to the higher levels in the USD INR because of the uncertainty about Fed policy. Should there be indications that rate cuts will happen from July, we might see some more squeeze in the dollar index, resulting in dollar rupee also moving towards 83. We've been here talking about the outflows as well. And there has been somewhat a subdued sentiment, I would say weak sentiment ruling in the stock market as well. All these things have kept the rupee slightly on the weaker side. That said, I think any push above 83 will invite selling intervention from RBI, so that should be a cap. We have, again, few data numbers from US that will be closely looked at, although it is a second tier, because that overall, it may add up to the Fed decision. Industrial production, the Michigan consumer sentiment, and the New York State, Empire State manufacturing, all these things are due today. So we might also see the trade numbers, the global trade numbers from India today. So some more data to look forward to before we, keep on the sidelines till the Fed meeting in the next 3 days. Thank you.
Thank you, JK. And the narrative which I can gather from the data which has been released from the US and based on your commentary is that inflation can be more entrenched is something market is fearing. And maybe Fed can even postpone their June rate cut. to July. But the total rate cuts for the probability of the total rate cuts this year is down from 90 basis points to 76 basis points. So that's something markets will keep an eye out on. Retail sales from the US was worse than expected. Control group sales, which is what Fed looks at, was down. Euro, which was holding up the 1.09 level, broke it towards the lower side. For rupee, the WPI inflation eased to 4-month low, but we did see some spike up to 80 to 90, 91 in the offshore market. We are still holding on to the higher levels, but as JK mentioned, if in the Fed meeting there is some indication that the rate cuts might further be tapered down, we can see some more squeeze. That's it from us today. Thanks for listening. Tune in on Monday for the latest in the financial markets. Have a very good weekend.